Line by line, here's to the good parts. Talking about the deductions. We're focusing in on line 8, the standard deduction or itemized deduction. So check this out. With the new tax law in 2018, $24,000 is a standard deduction for married filing jointly. It's $12,000 single and $18,000 head of household. Head of household is for somebody that's not married and they are housing a minor for more than 50% of the year. Look at the rules in Form 1040 as it relates to qualifying for the head of household, because if you qualify for it incorrectly, there's a special penalty just for you and your preparer. So make sure if you're doing the standard deduction, you're picking the right one. Married filing jointly is 24 grand, single 12,000, head of household 18 grand. Why are those numbers key? Because you're going to compare them to your itemized deductions. What's itemized deductions? We're going to pull up Schedule A, okay? Schedule A is your itemized deductions, and what we're talking about here is medical, state and real estate taxes, local taxes, your mortgage interest, and charitable, basically. Now, you're going to see that there's a few more line items on that, but for most Americans, that's what that includes. Here's the thing to know. 95% of Americans are not going to be able to itemize their deductions, and I don't say that as a bad thing. What I mean by that is that the standard deduction for 95% of Americans will be higher than their itemized deductions, and therefore you want to do what? You want to take the higher amount. Let me say this another way. If your standard deduction is $24,000 married filing jointly, but your itemized deductions is $20,000, you would not want to take your itemized deductions. You'd want to take your standard deduction. So I'm meeting with clients, and I'm not making fun of them, because at first you think, I don't get to deduct charity anymore. I don't get to deduct mortgage. I don't get to deduct my medical. I mean, like Jamie Christmas. It's not that those things are not deductible. What we're talking about here is that you get the either or. Still tabulate all that. We're still having clients that we say, hey, send us in those documents. Send in your charitable, your medical, your real estate taxes, your state taxes, anything that's qualifying for the itemized deduction, send it in. Let's tally it. But do you think for a second I'm going to be like, well, nope, we're going to take your itemized deductions if it's lower than the standard deduction? No. So here's the thing. As we're looking at that Schedule A, and you're trying to figure that out, here's how you know what you got. You're just going to look at that line 8, and if it says $24,000 and you're married filing jointly, boom, you know you got the standard deduction. Now here's the thing. You know, the politicians have said that the taxes have gotten simpler. This is really the one area that it has. That is it. This one area, standard deduction. So bottom line is, if you're getting the standard deduction, make sure though that you couldn't take advantage of itemized deductions. You hear what I'm saying? Maybe those would add up to it. So here's the bottom line. Here, I do have a quick question for you though, because if you're having your mom do your taxes, does she still cut your hair? Okay. Is your dad doing his is your dad doing your taxes? Okay, is he coming over and waking you up in the morning and giving you breakfast? No. So stop relying on your folks to do your tax returns unless they're JJ the CPA or they do this for a living. Stop it. This is the area right here where do you want to be one of the 95% of Americans that didn't dig enough to get enough itemized deductions to exceed the standard deduction, to give a little bit more punch to the taxes and reduce them down? Bottom line is, line 8 is key. Line by line with JJ the CPA, check it out, because we're coming to the sexiest, I mean the sexiest line item on the Form 1040. Get ready.